All right. Hey, it is Ashley, Keller Williams Real Estate Everett. I'm super excited to have Cheryl Basher here from Elevate Mortgage. We're going to be talking about VA loan basics. So the hope is that if you have any questions about VA loans, we'll kind of answer the basic questions here. And Cheryl is an expert in VA loans. She's done tons of them, and she's going to be able to help you out. So Cheryl, will you please tell us a little bit about your experience with mortgage?
Well, hello, Ashley. Thanks for having me on your video. It's great to be here.
Look, I'm excited to have
And
you.
yes, I've been doing mortgages for 3 decades now. Been working a lot with military homeowners and home buyers. Uh,
Military
um,
families,
I've
like
been
for the
working with
whole 30
military
years?
families for several years. Everything from relocation to retirement, veterans, active duty, and helping them get the process, helping people sign loan documents when somebody has been sent off out of country. So the process all from the beginning to the end, and
Wonderful.
looking at their affordability and the options of buying now, even though they may be shipped somewhere else in 4 years. You can always save that as a rental and buy again, which a lot of veterans don't know.
Yeah. Well, look, I love that. I love that you have a lot of experience with it. And I can't remember, did you say that you have military ties yourself, like your family does? Is
Yes,
that
I do. My father was in the military. My
okay?
husband is retired from the military.
Yeah.
We're part of a JBLM military group, and we help out with wounded warriors and do a lot in the community and a lot of training. And we go up and play in the mountains and take people to see the beautiful Pacific Northwest.
Yeah, well, that's wonderful. Look, I'm happy that you do that work, and I know that that's where your heart is, and so I think it's great. All right, so let's get down to the nitty gritty.
Yes.
All right, so I guess maybe we should start with like eligibility. Okay, so how do you know if you can get a VA loan?
Well, that is a very good question. And there's some rules of thumb, but there's also a lot of different circumstances that can change this. Rule of thumb is if you're in active duty for 4 years or in the reserves for at least 6 years. However, if you're ever injured while in the military, ever receive any wars, or if you're ever awards or ever at war, that can change your eligibility for more sooner than the rule of thumb.
Okay, so you could do like a shorter time period depending on your individual circumstance. So,
Your individual circumstances.
yeah, would you know that like when you're discharged, or how would do you find that out?
You would not know that. What I do with my clients is I would ask them for a copy of their DD 214.
Right.
And then I work directly on their behalf with the VA on determining their eligibility. And then once that has been determined, I will send them a copy of their certificate of eligibility. So all I need is a copy of your DD 214, and I'll do all the hard work for you.
Oh yeah. Well, that's awesome. I mean, that makes it pretty simple. Okay. All right. So,
Yes,
so you have to have a certain amount of service.
you do. And like I said, I mean, once you are in the military, if you've been there in the military for at least 4 years, you can still be active member and get a copy of your orders from your captain,
Okay.
and that would allow us to work with the VA to get your eligibility.
Okay. All right. Okay. And then the other thing I think that might come up with eligibility is if you are unmarried and plan to get married. So is it that okay, if you're not married and you plan to get married,
Hmm.
okay, if you went that route, the person could not be on the loan with you, is that right?
That is correct. So
Okay.
only veterans and their spouse can be on a VA loan. So
Okay.
if they're not married, their girlfriend, fiance cannot be, they cannot buy a house with their parents and use a VA loan based on their veteran status or,
Okay.
siblings. So it can only be the veteran, and they have to be the primary borrower and their
Mhm.
spouse.
Okay. And so this is unlike FHA. They don't consider everybody's income. They're just kind of like, hey, you're going to be the borrower. Is this?
No, they do consider everybody's income.
Oh, they do. Okay.
So
So they just couldn't be on the loan. Like if you had, so like if you were living with somebody and you weren't married and you wanted to use the VA loan you're going to buy, they do use.
yes. No, okay. So if you're applying and you have a girlfriend or a
Right.
boyfriend,
Right.
and you are not married, then we will only use your income, the veteran's income.
You can only
If
qualify with that person.
right once you're married, then they will look at both incomes.
They look both. Okay, they would look at
So
both.
yes,
Now, are you required to have, if you're married, are you required for both of you to be on it, or can you just say, hey, whatever, like maybe your spouse is like a stay-at-home mom or something, I don't know, or whatever, stay-at-home
yeah,
dad. Like, can you just be like, okay, we're not going to put him on the loan at all?
you can do that. Yes,
Okay, okay,
yes.
so
I
you have
mean,
the
there'll be
flexibility,
other,
like,
just like any other loan, a conventional or
okay,
FHA, they'll be required to sign documentation,
okay.
allowing a lien on the property on their primary residence.
Oh, okay. And is that like a Washington state requirement? Like, is it
That is
because
a Washington state requirement. Yes,
that community property issue? Okay.
community
Okay.
property. Mhm.
Well, look, I think we kind of covered that. I think we went in deep there. Is there anything else on the eligibility that people should consider? I think that's pretty
Um, no, not really. Like I said, it is sometimes it takes a bit to get qualified or to determine your eligibility.
right.
So that's why I would just make contact with me and I would work with the VA. And anytime the VA has any questions,
Yeah.
we can deal with that.
Yeah. And then, oh, you know what we didn't talk about? So is there like a minimum credit score on this one?
Um, I mean, it is lower than the average credit score.
Okay.
Right now we're not saying, average is below, it has to be above 580.
Okay, both sides.
That's a typical average. But in general, there's different investors that have different overlays. So
Right, right,
as a
right.
broker,
Yeah.
I can look at your scenario and determine what program is going to
Yeah.
fit you
Yeah. Well, that's
best.
good. You've got some flexibility.
Yes.
Yeah, you've got flexibility there. Okay, great. All right. So then like let's kind of get into the nuts and bolts of it. Like let's talk a little bit about the funding fee. So on the funding fee, um, this is something that is only VA loans do funding fees. Is that right?
Only VA loans do funding fees, but they're similar to like a FHA
Okay.
fee, which they also could wrap in. So a funding fee is a fee for once you have your eligibility, for your initial loan. So it's a fee that can also be wrapped up into your loan amount. So
Into the loan
it's
amount.
called a
So
financed fee.
yeah. Yeah, it's finance. You don't bring that to closing.
You don't bring it to closing.
It becomes part of
And
the loan.
it's part of your loan. So, and the funding fee can vary depending on the loan program, whether
Right.
you're putting money down and whether you've used your VA benefit
Okay.
in a previous
if you
purchase.
do money down, does it decrease the funding fee?
Yes, it does.
Okay. Okay.
If you put money down, it'll decrease it.
And if you've used your VA benefit before, your funding fee is
Increased.
okay.
Yes. Yes. So it can vary anywhere from 0.5% on a refinance to 3.3% on a subsequent use.
Okay. So oh, that's what you brought up, refinance. So if you use so let's say you bought your primary residence, use a VA loan. All right, and then
Yes.
you refi it. Is that like using the benefit again?
Yeah, well, it is, but you're just replacing the benefit. So
Okay.
you're not really using it a second time.
Okay.
You're
Okay.
just you're replacing it. So
Okay.
they call those interest rate reduction refinance loans,
Yeah.
also known as EARLs.
Yeah.
And they're really inexpensive to do. There's a 0.5 point funding fee, and you just reduce your rate, no appraisal, no
Oh,
income, no nothing. So,
wow.
I mean, not even income. So it's just basically saying, hey, rates have gone down, let's rewrite this for you.
Wow.
So, and they can close in like a week.
Really?
Yeah.
And
Yeah.
that is not, you can't do that with all loans.
No, VAs are the only ones. I mean, there's streamlines for
Yeah.
FHA and such, but VAs, once rates drop, we'll be doing a lot of those again. All of those clients, and I'm putting them the 6 and 7s right now. Yeah.
Yeah, that's a special. Look, here's the thing. I've never heard that benefit before.
Really?
No, I've never heard somebody say, okay, yeah, you do VA loan. If you want to refi it, it's like no appraisal, like all that stuff. Like, dude, that's slam dunk.
Oh yeah. Yeah.
Slam dunk. Okay.
Which is why we were so busy when interest rates are so low.
Sure. So when you do that refi in that manner, are you able to do cash out at that time, or is it just straight up rate reduction?
It's straight up rate reduction. There's a limit at your cash out of like less than $2,000.
Okay, so you're not going to be able to do like any you're not going to like do a kitchen reno.
No. If you want to pull cash out, then you have to do a full cash out, and you have to pay a refinance funding
it's
fee.
like a full.
It's a full refi. Mhm.
Okay. Okay. Well, that's cool. That's really neat. Okay. And so on the funding fee, you can be exempt if you're on not that you have to be on disability, right? What is it?
You don't have to be on disability if you have any VA related disability. So
Okay.
it is very common for veterans to, whether they have PTSD or
Mhm.
slight hearing problems.
Oh, yeah.
You may have retired from the military 15 years ago
Right.
and you're dealing with hearing loss and you can get a 10% disability from the VA. So they'll
Right.
pay you a monthly fee. So if anyone has a monthly benefit that's not retirement oriented from the VA, they can be exempt from their funding fee.
Okay. And that
And
would
that means it's completely waived.
yeah. So then basically we're just talking like maybe closing costs. Like that's not
Exactly.
even the back end of your loan. Yeah.
Exactly.
Yeah, that's great. Okay, well, yeah, I think that rolls us right into closing costs. So I know that like, VA loan can be zero down payment,
Yes.
right? But I think, kind of closing costs gets a little bit overlooked. So
It,
let's talk a little bit about
let's
that.
talk about that. That is very common. So
Yeah.
back in the day, there were double zero downs, not very available, which meant no closing costs, no down payment. Pretty much the common practice is the zero down. So you can buy a house for 500,000 and you finance 500,000 plus your funding fee. However, what people don't realize is there are closing costs, your appraisal, your title, and all of those fees. Your first year's homeowners insurance. So you add all of those fees, and on average, they can range anywhere from 8,000 to 18,000, depending on your purchase price.
Yeah, and depending on the situation too, right? Because you could still do like a rate buy down doing VA, right?
Right. You
You
can
know,
do a rate buy
they
down.
add up. They
Exactly.
add up.
Well, and
So,
VA loans can do zero down up to $3 million purchase price,
oh, yeah, that's
which is
intense.
crazy.
Mm-hmm.
It's crazy, but believe it or not, especially on the east side, they're done.
Yeah, well, I can imagine. I
You
can
know,
imagine. Look, I think there's some advantages to doing that. I mean, you could do like a multifamily. You could easily go to that on that.
yes,
Yeah. So
definitely.
the thing to note though is that there are closing costs, and there are also actual like kind of like upfront costs, right? Like if you want to get your home inspection done, different from the appraisal. If you want to get like a
Exactly.
scope done, different from, so there's like those kinds of like upfront costs that you would have associated with it.
Yes. And just like your earnest money,
Yeah.
you'll have to,
Yeah, you
you
have
have to
that.
put earnest money down.
Yeah. Yeah.
If
So
you, but that any money you put down is your earnest money or your, not your inspection, but upfront costs that would go towards your closing costs.
correct. Correct. It goes towards your
Yes,
closing costs. It wouldn't go towards the down payment. And then people can get credit from the seller. I think that's
that is
really
correct.
common to request and up to 6%.
Up to 6%. That is correct. So
6% off.
seller could pay that. So if you were to give your $10,000 earnest money, seller's paying all your closing costs up to your 6% and a buy down, and you're basically coming in with zero money,
Yeah.
you would get a refund of your earnest money at closing.
Correct. Yeah, I've had that happen before. So like just basically at the end you will know like, hey, you'll get back whatever you put, like
Get back whatever you put in.
$1,000,
Yeah,
whatever, 5,000, whatever you put in. Yeah, that's really
right.
awesome. Right. So then, I think that kind of like transitions us to talking about like the property condition. Let's talk about appraisal a little bit because I think, even for someone who's maybe selling their home and they're like maybe a little bit hesitant to go the VA direction, right? Like
Right.
let's maybe like clear that out a little bit, you know? A
Yes,
little bit.
yes,
So yeah, let's talk a little bit about like the appraisal and yeah, what the home has to be
yes.
like.
So the home does have to be inspected by a VA certified appraiser that is ordered directly through the VA. Home conditions are basically the main safety conditions. I mean, as long as there's not any dry rot or any stairs that are considered unsafe and don't have rails. Basically, home condition and home age, as long as there's no safety concerns, it will pass a VA appraisal.
Yeah, and that's the experience I've had. I mean, I think sometimes people are like trying to get these houses that are like almost falling apart, like probably
Right.
gonna
You
work
can't get a rehab home on with a VA
out. Yeah,
appraisal.
but you can do a VA rehab loan,
Yes.
right? You could do a VA
Yes.
rehab loan, but that's a whole different thing. Like that's
But
a
that's a
whole
whole different thing,
yeah,
right?
that's a
You
whole
would need
different ball of
a
wax.
contractor and bids, and right, it would be done similar to a construction though.
Yeah, so
Right.
I mean, maybe we talk about that in the future. We could do a video on just
Yeah.
VA rehab loans, but like I think that is something to know. Like let's say you are looking to do a VA loan and you find a home that is not in condition that would go just regular VA, you would have the option to do a VA rehab loan. And
Yes, you would.
yeah, and I think that what you're really trying to say is that the appraisal process is really similar to just any appraisal. Like it still has to have the CO detectors. It has to have the smoke.
Right.
You can't
Right.
have like no rails on the stairs, like obvious stuff.
Right. Right. Exactly. And it's, very similar to the FHA appraisals nowadays. They used to be very strict where every little thing was called out.
Right.
The one thing with a VA home that you're selling, if you happen to be on a well, you need a water test done.
Okay.
And so you need to have that. They usually take about 10 days to 2 weeks.
Yeah.
So that's something that I would recommend if you're doing a listing or if you're buying a house, ask if there's been a water test done yet.
So would that be something that the buyer does as a part of their inspection, or would the seller do that?
The seller would normally do that.
Okay.
Right. The seller would normally do that, and we can use their results as long as they're within 12 months.
Okay.
So if the seller did it 2 years ago, and then we would need an updated test.
Okay. What do you think is the most common? I don't know if things even ever come back. I'm trying to think about the couple of VA loans I've done. I haven't really had anything come back in appraisal, but what would you say is like the common thing that's overlooked? That comes
Not
back
having
into
hot water
conditioning?
tanks, not having hot water tanks double strapped.
Oh, but that could come up in conventional. Right?
Yeah, right. But that is the most common in the VA loans.
Yeah.
Yeah.
But that's such a simple thing. And, here's the thing. If you're selling your house and you're preparing it, like your agent should just let you know you need to put straps.
I know.
Right? I know. It's just unfinanceable then. Like, you know what? Like all finance.
Right. Yeah, I mean, any inspection would call that out, right? I mean, if you had a pre-inspection done or you had an inspection as the buyer, that should have been called out.
Exactly.
The second one that I've seen come up, which I find odd, is not having a fire door between if there's an attached garage.
Yeah.
And there's not a fire door between the garage and the house.
Yeah.
I've seen that come up multiple times especially on older homes.
Yeah, well, that's good to know. Here's the thing. I've been in a lot of houses where you do go and the garage door, for whatever reason, has been turned into like kind of like a hollow core interior door.
Right.
It doesn't have the closers on it.
Yeah.
It's like, well, this is not it's not even the right kind of door.
Right.
Like it's just what the code is. I mean, I don't know what else to say about it, but code says it has to be a fire rated door, and it has to have the automatic closer on it.
Exactly.
And people commonly disable those closers. They like take out the pin or whatever so that it'll just open. But it's like, man, when you're getting your house ready, get your pin in there, make sure it's a fire rated door. Don't worry.
Exactly. Exactly.
You know what? Like I could see how that could be a pain. Like, especially, I think you mentioned older homes. Like, I think it's really common. Like I've seen doors where it's like a regular wood door with like a glass window. I'm like, man, that's not gonna.
Yeah. Yeah.
But
exactly.
Nice.
Yeah.
It's got a lot of character.
It has character, but yeah, it won't protect your house if a fire starts in the garage.
No, it's not going to work out. Okay. Well, that's good to know. I think that maybe, I hope that kind of helps people like relieve their fears around it, right? Like a water heater strap. These things are like really not that big of a deal.
Oh, right. And they take literally 5 minutes to install.
Yeah. Yeah.
Really a few bolts to the stud and you're done.
Yeah. And then you can do condos VA.
You can do condos VA. There is they have to be VA approved.
Right.
So the condominium complex, VA has a pretty extravagant list of approved condos. When you're listing, or the listing agent should know if they're going to be VA approved. There's more that are VA approved than FHA approved. So it's easier to get a VA approved condominium than FHA.
Yeah, so people don't need to worry about it. And I've seen that list. Like you can go online and usually you can find.
Oh yeah, you go online to the VA and find condo listed and yeah.
Okay. But they won't do spot approvals.
They will not do spot approvals. If it's not approved by the VA, you cannot do a VA loan on it.
Wow. Okay. Well, you know what? I think it's good, right? Now you know what you're looking for. So if you're considering a condo and you're going to do a VA loan, talk with your agent and make sure you guys are just looking at the VA approved options. That way you don't get your heart
Exactly.
set on something that won't work.
Exactly.
Yeah. Yeah. Well, shoot. I think we pretty much got it. Is there anything that we missed, like VA basics?
Um, Not that I can think of. I think a lot of people don't realize that they're eligible when they are.
Mm,
And like I said, it starts by talking to, an agent that knows VA as well as a lender that knows VA
yeah.
and help you walk through the process.
Yeah.
And it's a stress-free loan to be able to get into something for under $10,000. It's kind of
Yeah.
nice.
Yeah. Well, I mean, I think having the option to do like, minimal down payment, I think it makes, you know what it
Hmm.
does? It makes it very accessible,
Yes.
right? Like if we're talking about you maybe have to come up with closing costs, but you can work it, like this market's great. Like I think you could probably negotiate some closing costs. It's almost like you could like literally almost do it with no cash out of pocket.
Exactly.
Yeah.
Exactly. And that's not uncommon in these days
Yeah. Yeah.
right
That's
now.
wonderful. That's wonderful. Well, shoot, I'm excited. I'm happy that you were here. Thank you
Well,
for
I
sharing your
appreciate you having
knowledge.
me on your show. So this has been
Yes.
awesome.
Yes.
So
Well,
I
look, I really
really
appreciate
appreciate
it.
it. And anyone has any questions, they can reach out to me and I'd be
Yeah.
more than happy to walk you through the process.
Yeah. So is the best way for them to get a hold of you, like by phone or email or?
Phone be the best.
Yeah, we'll put it down
But
below.
you down below.
Yeah, we'll put it down below. It's going to be down below. The information will be down below. Look, I really thank you for being here, Cheryl. And it has
Well,
really been a pleasure to have you on.
well, it's been a pleasure talking with you, Ashley, and I look forward to talking to you again soon.
Yeah, rock on.
All right.
Well, everybody, that's the show. Please like the video, subscribe to the channel. If you have any VA questions, look, Cheryl is the person. Drop her a line. She'll help you out. Until next time, take care.